Okay, well, there's lots happening in the auto sector. There is, of course, Tata Motors numbers that we have to discuss. There are auto sales that have come out for the month of July, as well as there is the Ola IPO opening today. So much to talk about. Abhishek Gaoshinde is joining in. He's the Deputy Vice President Research at Sharekhan by BNP Paribas. Abhishek, thanks a lot for joining in. First on Tata Motors, what did you make of the numbers? The management commentary was a bit cautious, but overall numbers looked good. What's your call on the stock now?
See, broadly, yes, rightly, the numbers were almost in line with estimates. What I can say that at the EBITDA front, although margin was slightly above estimates. Going forward, what is happening that management is holding up its guidance for the JLR for FY25, and its commentary for CV segment has been improving compared to what was in the previous quarter. In the PV segment, we know that it is the inventory issue, but what company is backing up on is its the sustainability on its EBITDA, its market share, and aiming for an improvement in its operating performance. In coming month, it is launching a product curve, which company is expecting to further boost up its position in the market. The overall, what is really happening? This Q2 and Q3 may see some kind of a headwinds in the volume side in a JLR front, mainly due to the issue with the vendors. But management is saying that it will mitigate it by generating the alternative sources. What is the call on the Tata Motors is that overall the structure of the company has been changing. Companies is delivering now the sustainable performance, given that this was the consecutive sixth quarter when the JLR has reported more than 1,000 million GBP kind of a EBITDA, which was earlier a phenomena which we see in the quarter four only. But now it has been sustaining the performance, and this sustainability is building up a kind of a predictability in this business model, which the street is liking. So considering that structural thought process, we have been positive on Tata Motors, although we can see some kind of a hiccups in JLR's volumes in a short term, which we believe that company would manage over the period.
Okay, so that's on Tata Motors. I wanted your thoughts on the Ola IPO as well. It opens today. It's a big one, although, of course, it has a huge market share, but it's also sitting on big losses. What is your recommendation to investors?
See, in generally, due to the compliance, we do not recommend on the IPOs. But what I can add on here is that it is a different kind of a company compared to that what we have been seeing in the listed space currently. It's a startup. It's obviously it has been making up losses, which may come down if the volumes would surpass. But what uniquely this company is offering, it's a bouquet of an vertically integrated business model, which has its own benefits and negative issues. It's an compared to the other two-wheeler OEMs, it has been making most of its raw material in-house. It has its own gigafactory project, and it is its own distribution network. So say, for example, the currently listed legacy players are just manufacturing the product and selling to the dealers, and then the dealer is selling to the customers. So they are not managing the working capital kind of a thing. But here the company has to carry on the inventory on its book because it has its own distribution network. Side by side, when you are manufacturing all the components together in-house, then definitely the recall and the warranty issues would also be with you. So you have to do capex for that. And side by side, if everything will go, then you will only enjoy all the benefits. So the ecosystem part which the other players have been developing, that is not the case here. I just give an example that few years back, one of the players went to the West Bengal with its own ancillaries ecosystem, but that has not been worked well. So the pressure or the losses was being shared by all the players. But here, if something would happen, then this particular company has to bear all the fruit. So this kind of risk is also assisted with the company. But side by side, it's giving an opportunity to play a early stage, play a EV cycle at an early stage.
Okay, interesting. So it's giving you an opportunity to play the EV cycle at an early stage. But the important point, as you just made, right, is that in order for its losses to go down, the EV market needs to expand exponentially, which is looking tough at the moment, given that it's already sitting at over 40% market share. And we're seeing a little bit of a slowdown in the EV market in the two-wheeler space currently. So got that. Finally, on the auto sales, we noticed that two-wheelers are under pressure, whether it's Hero MotoCorp, whether it's Royal Enfield. There's degrowth this time around. Would you be cautious here, or would you look for an opportunity to buy?
In the case of a Hero MotoCorp, what we understand that it was an issue with the logistics issue and some capacity constraints. So even if you see that the YTD numbers, it's still reporting a high single-digit kind of a growth, given that the first 3 months were very good. But what is important to see here is that among the overall auto pack, two-wheeler volumes are still at a high single-digit growth rate if you are seeing the YTD numbers. And as the festival season would kick in, we believe that the current inventory would come into the actual sales, and that would help the players to build up inventory for the latter part of the festive season. So far, we are not so much worried on this Hero MotoCorp per se. In the case of iShare, that it has been somehow lagging the volumes for last 6 quarters or 5 or 6 quarters. If you see that its RE volumes is stagnating around between 225,000 to 30,000, and in this month it's also somehow lagging. So that we can say that's an issue with that particular category only. And as the festive season would kick in, we are waiting that how this particular iconic premium category would take into the shape going forward. That from August onwards, that Gorilla 450 will be available. So we are hoping that some makeup would be happen after this Gorilla would be available in the market. In the case of
okay, so I didn't get your view on it. At this, it's almost now at 5,000 rupees, Aisha. Is the risk reward still favorable?
See what is happening that post this rise in the competition, it has seen some kind of correction in the valuation. So from valuation per se, it's not so premium at compared to that was in the earlier cycle. So valuation part is saying the critical thing is that the volume performance that would drive the earnings. So say for example, for last 3, 4, 5 months, we are seeing this Hero MotoCorp and Bajaj Auto at 19, 20 and 25, 26 kind of multiples. But despite that, stocks are performing because they are outperforming in terms of the earnings. So earning outperformance is the critical thing which we are looking in the Royal Enfield. That's why our preference is currently more towards the mass market players like Hero MotoCorp and the Bajaj Auto.
Okay, all right. We will leave it at that. Thanks a lot for joining in and giving us your take on the auto sector.